Welcome back to the channel. My name is Patrick. In today's video I'm going to talk a little bit about using a negative risk to reward ratio and also trading without a stop loss. First things first, just finished trading for the day. I'll show you my trade I've taken. This is 10 minutes before the London session is due to start. Entered here, scalped it there. I am still here, I am still trading. I'm just not posting as often because there's not a lot to show you guys. I showed you all my ways of finding trades. There's 10 pips, how I find trades, how I scalp, and what I do routinely. Trade on one pair, so I learn the behavior of the pair and so on. Okay, that being said, so what's this? So normal trade, we had a little trend here, fake stack is continuing, comes here, break stack structure, that's my entry. That's my entry. I mean, most of you have seen this already if you're subscribed. That's my entry there based on this break structure of this high here. See, we have a high, a lower high, lower high, fails to create a lower low, and it comes here and breaks that high. So when it pulls back in, that's my entry, and I scalped it for 10 pips. Very simple. That's what I do on a regular basis. Okay, so what was I talking about? So the price is pushing up. I expect it to do so. I know where I believe it's going, but I'm not interested in holding it. I'm trying to be consistent in my trading by scalping routinely. Okay, so let's see, 10 pips, risk to reward, it doesn't matter. What I want to show you really was what I first saw, and I looked at it and I scrutinized it. I thought it was a bit crazy actually, but I'm starting to understand it. Okay, and it was trading with a negative risk to reward ratio and also trading without a stop loss. Okay, so I was in a trade yesterday here. Okay, so let me just show you. So we had our trend going up here, taking price higher. Okay, so here is the high. If we zoom out or go to a higher time frame, we could look across to the left and we could see price is here. It just entered into this supply zone, so it's above this high here. It's in a new area. I'm expecting it to go down. Okay, in this flag zone here, I'm expecting it to pull down to tap into this demand zone and potentially continue its uptrend, which is exactly what's going on. So I read it correct, but unfortunately I lost. Well, I didn't lose the trade, I killed the trade. Okay, and I'll show you why. I'll explain why I killed the trade, but it's not really what I want to talk about. What's more important is how I could have stayed in the trade and made it a profitable trade. Okay, so what I saw is the trend that took it up into supply, and then I had a breaking structure. So we had a low, a higher low, and I had a breaking structure there. Okay, so I think I entered a little bit earlier, to be honest. I entered possibly around here. Okay, I entered there and I was trying to, yeah, that's it, exactly there, because I had a breaking structure there. So we had a high here, fakes up, breaks there. So I entered there. I was trying to get it down to about 15 pips, sorry, 10 pips again, but it was on 26. I think I entered it higher. I entered it roughly there, and I was just trying to get it to run down to 15, which is there. Okay, so you can see it got there eventually, but I decided to kill the trade, and the reason I killed the trade is because there was news due, and this is what happened. Okay, so the news catalyst came up, it shot up about, I don't know, it shot up, took everyone here out, which would have included me if I left my stop loss there, which I didn't, and it went all the way down, reversed and came back up. Now, I use a negative risk to reward ratio, therefore I'm happy to risk 2 to get 1. So my stop loss was not here, my entry was there. So for me to risk 2 from here, my stop loss would have been, and my 1 is 10 pips, so my stop loss is about 20 pips above this zone here. So that's 25, we're looking at 45. Just show you that quickly. Let's go to a higher time frame, even higher time frame. Okay, there we go. Alright, so my stop loss would have been exactly there. Okay, So sitting in the middle of nowhere, and the reason for that is because I expect manipulation in the market. I'm seeing it a lot. I prefer trading Euro USD because we don't get this random spikes up before it goes down. Normally it just goes down. So I've been trading the same pair for a long time. I've noticed a change in its price action. It's becoming a little bit more volatile, leaving equal lows, spiking up before it goes down, and all sorts. So deliberately running people out before it goes into direction that you would expect it to go. Okay, so that's why I started using a negative risk to reward ratio, and it's becoming a consistent theme for me to stay in trades. And as you can see, if I did stay in that trade and I use my negative risk to reward ratio, my stop loss would have been there. I would have got the 10 pips quite easily, and I could have got more in theory. And yeah, I could have got more in theory. That was news. It went all the way down there, which is where I would expect it to be bought up around here to come back up. So when I first started, I saw one or two YouTubers who were trading supply and demand, scalping, and they didn't use a stop loss. They said they use a mental stop loss, and I looked at that as crazy. Okay, but I can see now, based on my experiences with this pair, why they do so. And the reason is because a lot of the times, you know, a price or the market makers will spike it up before it goes down, or spike it down before it goes up. So using a loose stop loss or a mental stop loss is what the referral is, and normally people call it a mental stop loss. Doing so, you are able to stay inside the trade. For me, I can't do that. I can't do mental stop losses because, you know, if you lack discipline, lack experience, you just hold that and you're just praying for the price to go in your direction. I can't do that. I need some kind of consistency. So what I've started doing now is using what I've been taught, which is using a negative risk to reward ratio. In doing so, if my entry is spot on, which it was a really good entry right at the top there. If it is good entry, using a negative risk to reward ratio, if I'm going for 10 and I use a negative risk to reward ratio of 2 to 1, I'm risking 20 pips to get 10 pips. And that's what I did in this trade setup, and that's how if I held this trade, that's what I did in this trade setup. If I held this trade, I would have won that trade. So moving on from that, I learned that lesson yesterday and I applied it today, and I think it might become a consistent theme for me because I'm just tired of being spiked out and watching price go in my direction. So to do so, you need to do this. I'm not recommending you do, I'm just saying how I do it. Again, how I do it is entry has to be correct. I have my breaking structure here, boom, entered there, and my stop loss, I was going for 10 again, consistent again. I have to have some consistency in the way I trade, so I'm scalping for 10 pips every single time. So scalping for 10 pips, I'm using a 2 to 1. Normally, previously I used to do 1 to 1 and I used to win a lot of trades. But recently I found I've been losing more trades using 1 to 1. So now I've adjusted to the current market situation and I'm using a 2 to 1. So 7256, 2 to 1 would be down here at 706 roughly. Okay, let's call it 06. Okay, and that's where my stop loss was sitting for this move. And as you can see, it didn't even come anywhere near my stop loss. It stayed within its perimeter and it went in the direction I expected, and I got the scalp. And this is normal when there is no news catalyst. When there is a news catalyst, you can expect it to spike down before it goes up. But luckily today I didn't need my negative risk to reward ratio. Some of you may argue that using that negative risk reward ratio, you're probably gonna win. You're probably gonna win often, but you're gonna win less. Yes, you are, because you're risking 2 for 1, or you're risking 1% to get 0.5%. Okay, but for me, as you've seen in my previous videos, I am happy scalping for 0.5%. If I do that daily in a month, I am making, depends on my win rate obviously, but in about 6 weeks I am making 10%, and I'm happy to do that because I find consistency in doing that. Unfortunately, I wasn't able to record this trade live as I was getting my kids ready for school, and in the next following weeks I'm going to be a little bit busy. I've got to attend my younger brother's wedding, so I'm going to be a bit busy, but I'll probably post something, show you guys what we got up to, because it's going to be a busy day of couple of days, and I doubt I'm going to be trading. If I do, I'll try record it and I'll share any of those scalps with you as I am away. Okay, so just to give you a quick update on what I'm doing, I am now using a negative risk to reward ratio on a regular basis. This is why, and I am still scalping using a risk in 1%, aiming for 0.5%, and I'm just trading slowly because there is no rush. There is no reason to rush at all. Forget about the prop firms and their challenges. Most of them now, the good ones, have given you a long period of time, and it's more than enough to pass the evaluation stages and progress with your accounts. So there's no rush. There's no reason to over leverage and over trade. So I'm doing one scalp a day, 10 pips a day, and I'm done for the day. I don't trade every day now. I take days off. So I am moving towards a healthier routine. Now, if you compare that to where I started, where I was easily taking 50 trades a day, and I just didn't know when to stop. I will try and make 5-10% a day. Compare that to where I am now, I have progressed a lot in my trading journey, so I'm very happy for that, and I'm happy that you guys are here to share that with me. I'll keep posting, I'll keep giving you updates as I progress. If you find this useful, you know what to do. Hit the like button, hit the subscribe button. I'll keep you guys updated. All right, this is Patrick signing out. On to next time. Peace.